The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Laubscher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Laubscher. Thank you so much for joining me for another episode of the Cashflow Ninja and spending your most valuable resource, your time, once again with me. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. And if you want to stay up to date with everything that's going on at cashflowninja.com and access all of our free podcasts, our books, our reports, and our courses, you can subscribe to our newsletter at cashflowninja.com/subscribe. That's cashflowninja.com/subscribe. I've got a fantastic show for you today. I'm joined by Max Wright. Max, it's great to see you.
Hey, thanks so much for having me again.
So for some of our new listeners and viewers that's not familiar and what you're up to these days, can you just give us quickly a brief overview of your background and what you're up to these days?
Sure. Well, background, just a serial entrepreneur since a very young age. I worked in corporate for 6 months, realized it wasn't for me. And I just went out and started building businesses, and many fails and a couple of wins, and did pretty well for myself. Sold, exited my business, did pretty well around about the time, 2012, 13, when I first discovered Bitcoin. And then I've just been all in on Bitcoin ever since. Working as an evangelist, a teacher, a thought leader in that space. I had some years off in the middle. Every now and again I come back. This is one of those periods where I come back to help spread the good word.
Yeah, that was a good time to get in on the Bitcoin too. I can't wait to dive into more of that. I just want to share this too, and I'll know we'll get into Bitcoin, but around 2012, right? You said is when you discovered and got in. Now imagine if you were an investor in 2012 and you put your money in like a 10-year treasury in the US instead of Bitcoin, right?
Yeah, not so good. 10 years later, it's half its price.
Yeah. You'd be suicidal right now. Before we jump into that, so what are you and just to kind of like give our listeners and viewers a background too, you put out some incredible information and insights, and I really appreciate your views on what's going on in the world too. What are you seeing globally? What's going on and what's of interest to you? And what are some of the things that you're keeping your eye on as we enter this new year?
Yeah, it's just a great question. So it's a fun one. Is in like I have the pleasure of being able to watch dispassionately and almost for entertainment purposes only, the world's economy. And because, to quote Wayne Gretzky, it's like you just go where the puck is. If you know where the puck is going to be, just go there and life will be good, right? That's not a Wayne Gretzky quote, but it's a paraphrase. And so we know what's going to happen. Anytime there's any kind of disaster, anytime there's any kind of issue, they're going to print money. So we know that's going to happen. We know that we're in lots of different parts of the economy are in massive bubbles. We know bubbles always find pins. We know there's going to be a pop here. We know there's going to be contagion. We know one big pop over here means more big pops here, and pop, 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 pop. Until what? Until they print money like insane amounts, and we know that goes up exponentially. 2008 was the biggest care package money printing quantitative easing the world had ever seen. They debated it for months, and finally, after like 9 months, I think after Lehman, they eventually did the care package. Fast forward to COVID, and the debate was settled by then. They didn't need to debate it for 9 months. It's just like, oh, COVID, let's start printing. And of course, that rule of exponentiality, they had to print even more than the previous time. And so without a moment's thought, they just printed more than we've ever printed before in history. And, the next time, the bubbles that they cause find a pin, they're going to print more than they've ever printed before. And they probably do it faster than they've ever done it. They did it in days last time. So we know where the puck's going to end up, right? It ends in massive, massive, massive money printing. And that like you can kind of hang your hat on that. So now the only question is we get to sit back and like watch for shits and giggles. It's like, okay, which pin are the bubbles going to find? And so there's lots of different ways it can go down. There's lots of different potential pins out there, but I think the bubble may have already found its pin. And I'll get to what that is in just a second. But a little bit of background. When you speak to the experts about 2008, like what was the bubble? And it's like, what was the pin? And many of them will say, well, the first step was the stock market crashed in Iceland. And there was a number of UK banks invested in Iceland for some reason. And so when that went down, the British banks became insolvent. When that happened, it caused another domino effect in Europe. When that happened, it caused another domino effect in the US. Then Lehman went down. And if you just stop and think about that, the global financial crisis was caused by the stock market in Iceland going down. It's like, what? Does Iceland have a stock market, before that happened? It's like, what are you talking about? And so with that in mind, it doesn't take much to pop a bubble because a bubble is, it's ready to be popped. So right now, what we're seeing, and I kind of predicted this. If you guys will remember, like a year and a half ago, we heard the story come out about Evergrande, China's biggest real estate company, defaulting on some of its debt. Well, in the recent history, they officially went into bankruptcy, as did the second biggest real estate company in China, right? And this is just a monster. They talk about, China is the second biggest economy in the planet. Real estate is extremely important to them. Americans might not fully comprehend that, but as important as real estate is in America, it also pales generally compared to the stock market because Americans have the stock market to play with. And in China, that's not really a thing. You don't play in the stock market. So pretty much 70% of all wealth in the country is held in real estate. And so when that bubble pops, you're talking about well over 1 billion people just losing incredible amounts of their wealth. And the state of that whole economy, and it's absolutely frightening how bad it is. It's obviously centrally planned, communist. The data you're getting is lies. They've been papering over it, covering it, propagandizing it for decades. And it's so much worse than people would think. And it's beginning to unravel. It started unraveling 18 months ago. These are the next steps. Evergrande's gone down. And just all of that kind of world is just falling off a cliff. Now, what that means is that these two massive, massive companies in China, they have all this debt, both internally and externally. There's a lot of banks in like Kuala Lumpur and Tokyo and other places that buy up the bonds of those corporate bonds of those companies. And now, if they get revalued down to zero or pennies on the dollar, the question is which banks are going to fail throughout that region. And then if those banks fail, who else? And this is how the dominoes start to fall, right? And so it's a slow motion track. I actually can't believe it's taken this long from when Evergrande first defaulted on some of those bonds. But here we are, a full year later, more than 12 months later, if my memory serves. And now the next phases of this start to happen. And it's also well worth remembering and understanding exactly why those delays are there. And the answer is that these corporations, they have a team of accountants and CFOs and etc. who understand all this and do their books monthly and quarterly and annually and whatever else, and then they have to disclose it in certain timeframes to their shareholders, etc. And all of these things just takes months and months and months. So something bad happens, a small business, about it the next day. But in these big bureaucracies, companies that have 20,000 employees, 30,000, 50,000 employees, things happen, and there's the machinery that has to move to dot the I's and cross the T's and put that in the spreadsheet is significant. And then there's when do they have to report it? When do they have to say it out loud? And all of those kinds of things take time. But I think 2024 or 2025, we're going to see a real shit show in the world economy. And I think it's fair to say, time will prove me correct or incorrect, Well, I think it's fair to say the bubble have found its pin, and the China real estate market getting hit like it's getting hit, not something to sneeze at. There are long-term ramifications on this that happen throughout the whole world through that contagion process I just mentioned.
I want to take a moment to share something very important right now. Are you trying to figure out how to protect your savings from the banking collapse, which has already started, and the coming financial crisis? Most banks will fail. Deposits that are not insured by the FDIC will be lost, and there will be bank bail-ins. And this collapse in the banking system will lead to chaos in the financial system. Banks also provide loans to real estate investors. So, what do you think is going to happen to lending in the event of a banking and a financial crisis? You can be proactive and position your savings to protect it and also have access to it to use it to buy discounted assets by positioning it in your own banking system through the infinite banking concept strategy. Producers Wealth has put together a presentation at yourownbankingsystem.com where you will learn how to position capital outside of the banking system and the Wall Street casino, just like the ultra wealthy, to protect it and create a pool of tax-free liquid capital to capitalize on the massive opportunity to buy discounted assets, which is coming. You can access the presentation at yourownbankingsystem.com. That's yourownbankingsystem.com. What I find fascinating is the media coverage on China too in the West versus the media coverage in, let's just say, the BRIC nations, right? Which I still have a foot in it, being from South Africa and looking at news sources there and looking at seeing what is shared around there. It's fascinating because in the West you just hear of this superpower and the next global superpower, and everything's moving towards China, and obviously it's been the kind of like the model, I guess, of where the ruling class around the globe wants to take the West, is have a similar kind of structured surveillance society where you have a system that, corporations exist, but it's centrally planned. And there's corporations, but they don't exist without the communist party, right? They basically owned by them, and they're allowed to function as a result of their relationship with them. If you get on the naughty books or the naughty list, you probably don't exist anymore, and you're arrested or you disappear for a while, like Jack Ma. What is the psychology behind this? What is this just this fascination and how it's portrayed in the West versus actually reality there when it comes to China?
Yeah, I mean, so there's this rather insidious culture that's taken place in the West that, see, once upon a time, you would look at, say, there's that culture over there and there's this culture over here, and one's getting fantastic results and one's getting terrible results. You look at North Korea and South Korea, you go, clearly, capitalist good, communism bad. Very, very clearly. You look at the thing, you look at the results, and then you make some logical comparison. What could be the reasons for it? Over the last 2-3 decades, something very, very insidious has happened in the West, whereby in an effort to do a good thing, which is to reduce discrimination and things like that, the West has chosen to become utterly indiscriminate. And there's a problem with that, because discrimination is the basis of intelligence. It's like, as in, she is a discriminating shopper. It's like, well, if here's a product and there's a product and that's a good price, and you use your logic to see which is the best product and you buy it, you're discriminating against those products. Likewise, if you look at North Korea and South Korea, you need to be able to discriminate and say, clearly, communist bad, capitalism good, let's promote capitalism. But in an effort to reduce discrimination, children are taught that you're not allowed to make that observation. You're not allowed to say, that's just a different culture. You can't say that your culture is better than their culture. That would bring about discrimination. And so children are taught to be utterly indiscriminate. And if you ever watch, for your sins, you might watch TikTok videos every now and again, and you might see like street interviews with kids just saying the most retarded shit. And it's because they are terrified of having an opinion on anything. But then you still have to explain the real world results. So now you look at a situation, right, from all over the world, it doesn't matter, pick one, and you say, why is this culture succeeding where that culture is failing? But you're not allowed to make any rational opinion. You're not allowed to say, well, I can see there's this, that, this, and that. Like, you're not allowed to say any of that because you might be perceived as discriminatory. So all of the logical reasons are off the table, not to be mentioned ever again. However, you still have to explain it. So what's left? Well, it must be that the successful one, was tyrannical and oppressed the lesser one. The one that was successful must be evil, and the one that sucked and leads to terrible results, that must be good and virtuous. They're the victims of the oppressor. And you get in a situation where success and beauty and anything good is by definition bad. And anything bad that leads to horrific results, poverty, misery, suffering, tyranny, that must be good because it's the poor victim here. Because you can't utter the words that these ideas are better than those ideas and this culture is better than that culture. That's discriminatory. And so for this reason, the most successful countries, i.e. the Western countries, even in the minds of the Western people and the Western media, they are by definition bad. The only reason they're successful is oppression. The only reason America's so great is because slavery. Well, that's horseshit. Slavery was everywhere. It was ubiquitous. Every single country had slavery. Every single continent had slavery. The only thing that Western world did is they created abolition. That was it. That was, other than participating in it like everybody else, they were the inventors of it. But you can't look at that and say that that was good. You can't say that. And so you have to explain our success with one thing and one thing only. We must be oppressive, not that we're better. And so all of the other nations, they get romanticized and we get punished. And it's a very, very insidious thing that's happened. It has to be stopped.
It's going to be very interesting how that plays out. Yeah, that cultural kind of Marxism has taken root in over the West, and I mean that's a whole nother podcast episode of where that's all going, because it's just picking up steam and picking up more steam. In a world that we live in that is as volatile as it is, and as you said, there's bubbles everywhere looking for a pin, and might have found one in China. If we look at some asset classes, and obviously you're in Bitcoin, as we said in the beginning, you found that in 2012, and had you put all that money into a 10-year treasury, you would have probably been suicidal right now as opposed to Bitcoin. What's going on in Bitcoin? I think this is why I'm very excited to talk to you. If you can give us an update, what is going on in the space, and what are you seeing? What are you excited about, and where Bitcoin fits into this chaotic environment that we find ourselves in?
Sure. Well, I'll give you the summary first. Is that Bitcoin is in an unbelievably good spot. I'm more of a long-term thinker and a long-term play person. Looking at charts and predicting what's going to happen next week is not my bag. So, might there be another buying opportunity in the future? Maybe, I don't know. But here's my conclusion to all of that in the terms of the thing that I'm best at and more well known for is my long-term predictions, which is it is significantly more risky to not be in Bitcoin now than to be in Bitcoin. And I've been saying that for about a year. Last year, I said it was the year of accumulation. People are like, but people love to. They love to watch this, like YouTube channels like this and others. And it's like, tell me when the exact bottom is so that I can buy it. And the next day it goes up and only ever goes up and I get to feel awesome. And the problem with that mentality is you're probably going to miss out. That's just what happens. I see it happen over and over and over again. A better question to ask yourself, is it riskier to not be in it or to be in it? And now you start to get a better picture. It's like, well, it could go down, sure. But what about it could go up 10x? And that's the situation we find ourselves in now. We've got a lot of tailwinds working for us. Just to make a couple comparisons, like today we're sit around about 50,000, just shy of price of Bitcoin. The last time Bitcoin was here a couple of years ago, there was a lot of speculation. We can look at on-chain analysis and see how long people have been holding their Bitcoin. And so what happened is during the euphoria of the 2021 bull run, there's a whole bunch of people come in, they're making silly decisions, they're investing with money they can't afford to lose. It's like this is a Hail Mary for them. And at the first sign of things going down, they're going to be sellers and they're going to get out. So we can look on chain and find out who owns Bitcoin. And weak hands back then owned Bitcoin, like a lot of weak hands. It was just people who were just speculating, had owned Bitcoin for a short amount of time. They started piling on, right? But now we've just come through a bear market. All of those weak hands, they got forced out. They were crying in their Cheerios. They lost so much money. They were selling at 20,000. They were selling at 15,000. They were selling at 25. And the smart money, the long-term money, they were buying up. They were the ones who figured out it's riskier not to have Bitcoin now. And so they were accumulating all last year through 15,000, through 20,000, through 25,000, through 30,000. And they want to put the Bitcoins in cold storage, and it's just there and it's going to stay there. And so now one of the big things to acknowledge about when we're at $50,000 now compared to $50,000 a couple of years ago is that Bitcoin is in the diamond hands now. Very, very strong hands. They've been through the worst of it. They're up 2x, 3x already. And so now there's no pressure on them to sell. There's no psychological scare, and they get to be very, very strong hands. That's a big thing that's going on. Of course, we've got to mention the ETS. It's been talked about a lot, but just for everyone to understand what that is and also how it's going to work. So for the last decade, I've spoken to a lot of financial planners because I'm in this world, I'm in this industry, and it's fun to talk about. And the absolute disinterest by financial planners about Bitcoin was always interesting for me, and I had to kind of figure out why. And I did. A lot of them are friends of mine, so they tell me how it works. But it's a very, very regulated industry, and there are certain parameters in which they're allowed to operate in, things that they can buy, things they can't buy. And they're all working under the umbrella because the compliance is so heavy. There's a couple of like big players like Ameriprise and others, and they have to follow the rules of the people whose umbrella they are under. Now, a big part of their job is they get paid a percentage of all of the money that they're managing, right? So if their client comes to them and says, "Hey, I found this great thing over there. What do you think about me investing in it?" The answer is no. It's a terrible investment. Let me tell you why all the risks are there. Because the moment they say yes, they can't invest your money for you. They lose control of your money. Their fees go down. They lose. So anything outside of the system, they have been disinterested in at best, or that the whole machinery of education, their superiors will tell them why Bitcoin is so terrible and so evil, and you've got to advise your clients to get away from it. And so they come to their clients armed with the bullet points without doing any research, they just come armed with the bullet points that their superiors told them to keep the money in the system. And that's the machinery of that incentivized system, and that incentive system is something that has to be understood. So now that is reversed. All of a sudden, if a client comes to them and says, "Hey, what about Bitcoin?" You, as an advisor, well, great. If you want Bitcoin, no worries. I can get Bitcoin for you. How much do you want? 1%, 2%, 3%? I'll allocate that for your portfolio tomorrow. And the money never has to go out of their hands. The money never has to leave their system. They can continue getting the commissions from that. So the incentive structure has completely reversed. However, the psychological structure of the last 10 years telling everybody why not to, and I don't need to invest time and energy, that's a much slower process. Now, why fight your clients? Because for every 10 clients who come along and say, "Hey, what about Bitcoin?" 8 of them you can convince not to do. Maybe even 9 out of 10. Don't do it. It's too risky. But 1 out of 10 leaves and takes his money elsewhere, and then you lose the business. So now this is awesome. They don't have to lose the business. They can just say, "Sure," but they're still carrying the baggage of what they've been saying for the last 10 years. And so, but now they're getting taught and educated by their superiors about why. Customer comes to you and says, "How about Bitcoin?" You can say, "Absolutely, great idea. Here's why." And you keep the person, you keep the business, you keep all of the AUM. So that process, though, of changing minds, that's well underway. It's moving quickly, and it's going to happen, but it does take time. And we're going to see some very exciting things over the next couple of years because of that.
So the halving is coming up in April. How has that played out the previous halving cycle? So maybe for folks, if this is your first exposure to it, if you could just give us basically the cliff notes on the halving, and then what this means, and then what happened in previous ones.
Yeah. So first, what the halving is, when Bitcoin was created, the schedule for how many Bitcoins are created every day, week, month is written in the code, right? I can tell you how many Bitcoin are going to be created in 2050. It's non-negotiable. It's there in the code. It's done. So what the halving, now the rate at which the number of Bitcoins come about get chopped in half every 4 years. This is the halving, right? So the rate at which Bitcoin comes about, that gets chopped in half. Therefore, if you understand geometric progression, after 4 years, 50% of all Bitcoin that was ever going to be created, so we know there's going to be 21 million eventually, right? So half of that, 10.5 million. After 4 years, there's 10.5 million Bitcoin in the world, all right? After another 4 years, there's 3/4 of the Bitcoin that's ever going to be, it's there. After another 4 years, there's 7/8 of the Bitcoin, of all the Bitcoin that's ever going to be, right? And that's where we find ourselves in a couple of months. There are, I think I got the correct number of halvings there. This will be the third, or is this the fourth? Anyway, doesn't matter. The point is that the vast majority of the Bitcoins that will ever be created are already here. And because of that, see what happened was in order to earn those Bitcoins that are being created, you had to spend a lot of money on electricity to get those Bitcoin. That's still the case. You still have to spend a lot of money on Bitcoin. But the amount of Bitcoin that are available for that has gone down. So if you want Bitcoin, so those miners, those Bitcoin miners who are burning electricity, securing the network, right, doing a very important job of securing the network of the most important financial instrument that's ever been invented. They're doing a very important work. They get rewarded with these Bitcoin. But the amount of Bitcoin that they get rewarded with goes down every 4 years. And they used to sell their Bitcoin in order to pay for more electricity to get more Bitcoin. They were able to keep a percentage, but they had to sell some, right? They'll always have to sell some. But the amount of Bitcoin that they were putting onto the market was able to absorb a lot of demand. Now that's gone. Well, it's getting reduced by 50% every 4 years. And what happens is there's a big shock that comes to the system because if the same amount of demand is there, just the same amount, doesn't need more demand. If just the same amount of demand is there, there's only half as much from the miner as being sold, right? So now you have to go and get it from somebody else. Well, how do you got to do that? You've got to bid up the price until they're convinced to sell. And as we just kind of talked about in the last segment, the people that are holding the Bitcoin now, they're what's called diamond hands. They do not want to sell because they know where this is going. They're not the people who bought last week and if it goes down 20% and they get scared and they run away. They're not, the price could go down 50%. They're not going away. These are very, very strong hands that hold Bitcoin at the moment. And so that process has played out several times in the past. And what happens is typically you get a nice little pump before the halving, because the kind of people like, oh, we can see what's happening. We've noticed the pattern now. The halving happens, the dynamics of supply and demand change, the price goes up. Let's get in early and front run it. And typically there is a front running process. And then around the time of the halving, typically not much happens. It's like it's kind of priced in and they kind of wait and see. And then shortly after the halving, a month or 2 or 3, then all of a sudden those market dynamics are felt. And things just kind of change. And typically in the year or 2 after the halving, that's when Bitcoin has its big, massive, crazy, big bull run, where we're talking, 10x, 20x, 50x, 100x one time. So, this is the time. This is why, again, coming back to that theme, it is so much riskier to not be in Bitcoin than it is to be in it right now, because you got all these tailwinds saying that the next year or 2 is just going to be just an epic, epic bull run.
I want to acknowledge one of our sponsors. Are you ready to ride the wave of success in the booming car wash industry? Tommy's Express Car Wash is the cutting-edge brand that is revolutionizing the way we clean vehicles. Demand for top-notch, state-of-the-art tunnel car wash is skyrocketing. Institutions are diving in head first, and the real asset investor is already a step ahead. They have a world-class operations team, and they're building a portfolio of Tommy's Express car washes that's on track to become one of the largest privately owned car wash portfolios in the United States. The margins on a stabilized Tommy's Express car wash are incredible, and accredited investors have the chance to join them on their adventure. Dave Zook, the founder and CEO of The Real Asset Investor, and his team are thrilled to share opportunities like Tommy's Car Wash with accredited investors that boosts your cash flow, unlocks massive tax benefits, and get you set up for a lucrative exit just a few years from now. To learn more about the opportunities offered by The Real Asset Investor, you can reach out to them at info@therealassetinvestor.com. That's info at therealassetinvestor.com. You and I had talked about a concept that you came up with on the previous conversation, the Bitcoin Bungee, right? And I just want to summarize some of the things we've already covered. So we talked about the external factor. We talked about bubbles and a pin, which you identified as China. So a demand destroying event that could flood the globe. In reaction to that, usually with a demand destroying event, everything goes down. And Bitcoin, being the bungee, is the first one to shoot up when a ton of new currency is created. If we think back of the March 2020 events, right, where everything went down and they just rocketed right back up, around obviously that year being a halving year as well. The other thing that I also just want to throw in with an external factor is, if you think, what was it, 4 to 5 trillion? I mean, there's different numbers you're getting of currency units in the United States was created right around like 2020, 2021, right? And now with the debt at where it's at and the budget deficits that they're running, what is it now? Almost like $1 trillion every 100 days or something that they need in the United States just to float this. And on top of this, that's just the current budget. I mean, people are getting another shock to the system here if they look at their leaders that's trying to ram through this current bill, which is one of the most disgraceful things to any human being with a certain level of intelligence, that you don't even know how they could come up with this and present this. But the amount of money that this will take, and it will usually it goes to the money laundering machines in the Ukraine and the Middle East and all the other areas of conflict. So you've got that, which is huge currency creation, and this is all external factors. And then you've got inside, you've got the diamond hands, people that have it are not selling. You've got ETFs, the public now through their army of financial advisors from Wall Street rushing into this, and a halving, which is reducing the supply and has this deflationary effect built in. I mean, it sets up a pretty good storm for this and a good run for Bitcoin. Anything else that you would add to that as a factor that people should be aware of? And if you have any comments on what I just shared in my quick recap there.
Yeah, I think understanding the psychology and the steps is well worth it. And you did a really good job of outlining that there. It's also happened to coincide that when Bitcoin does really well is when there's a lot of money printing. People really understand that, okay, they're printing money like crazy. That can't be good. If you increase supply forever, then obviously the laws of supply and demand break down. So the value of the dollars must go down, right? Then we also have to understand another concept. It's understood that there's no chance whatsoever of paying off the debt and the unfunded liabilities that we've got with all the baby boomers retiring. All of these things are very, very well understood, that there is no chance of paying off this debt. So what's the strategy with it? Does America go bankrupt? It's like, no, there's a strategy. And the strategy is you inflate the debt away. If you owe $1 billion, but then in 5 years, $1 billion is worth half as much, well, you've just knocked out half the debt. So for all their talk about we want to get inflation under control and whatever else, is that they absolutely need inflation. The inflation is the solution to inflating away some of the debt, right? And so you understand that these budgets are built in $100 trillion in unfunded liabilities over the next two decades. You've got, plus it's the strategy, inflation is the strategy to deal with the debt. And then you have the flight to safety from this melting ice cube, which is the US dollar, has to be something that is limited in value. And there's a lot of things that fit that category. Rare art, stocks, although they can, split stocks and things like that. But stocks of good companies. You've got real estate, and you've got Bitcoin. You've got commodities. There's a lot of different things that fit that category, right? We understand that. But getting out of the dollar is unbelievably important. You need to have your wealth elsewhere. The measly 5% they pay you on short-term treasury bonds is not sufficient to take on the risk of being in the dollar. So, but as you mentioned with regards to the bungee, there is black swan events. There is hard times where something happens, where the bubble pops and everything goes down. Bitcoin goes down, real estate goes down, stock goes down, everything goes down, and that breaks the system. and they can't have the system be broken. So they inject a whole bunch of money to buy up everything in sight. It doesn't matter what they buy up. They can favor the real estate market. They can favor the stock market. It doesn't matter what they buy. What they're doing is they're buying people, and now the wealth is, or the money. It's wrong to say wealth, but the money is there, and then people want, okay, I want that scarce. I can see that the government is printing. They had to print most amount of money they've ever printed. That's what happened with COVID. That's what happened with 2008. It gets exponentially bigger each time, and so they have to. I can see this is melting. What's the best asset to get into that is fixed or has a limited supply? We can always build more houses. There's always more companies, but Bitcoin is one of the first things ever. Even like things like gold, right? If the price of gold shot up to $20,000 an ounce, we would find more gold. We know where there's gold. It's on the bottom of the ocean. It's too expensive to go and get for a price of $2,000 per ounce. But it makes sense to go and get it at $5,000 an ounce. So as the price goes up for everything, more supply can come on the market. Bitcoin is one of the first times ever in history where no matter how big the supply, no more is coming. 21 million is all there will be. And so it's seen as one of these, for very good reasons, as this beautiful, perfectly supply-side inelastic commodity where people are going to be, competing for it. And the only way to compete for it is on price. And so all of that kind of adds up to, a very good time for Bitcoin in the next few years.
It's interesting that you mentioned the next flood is going to be bigger than what it was in 2020. And if you're thinking like 4 to 5 trillion is what they flooded the world with currency, just in the US, every single central bank around the world flooded their country with it. I mean, just think of what that's going to be in the next one, which also I want to bring this in. What was interesting too, in the banking system, the spike in interest rates broke all the banks. They're all broken. I don't think you're putting them back together. You're just holding them up until they eventually they collapse again. What was interesting was when you saw the Silicon Valley Bank, you saw 5 other banks go under around about the same time. There was a huge influx, also a little spike into Bitcoin. Which of course you can buy on an exchange and transfer into a cold storage and a cold, storage wallet, and have it outside of the system. How do you see that playing into it too? Because I feel like there's a shock coming, in not too far away in the banking system too, which is obviously going to impact the Bitcoin markets and other alternatives, right?
Absolutely. Yeah. So there's so many things in bubbles, and all bubbles find pins. So let's talk about the banking industry for a little bit here. So in March of last year, we had Signature Bank and First Republic, as you mentioned, and the solution was a short-term 12-month facility that the Fed set up that the banks could use. And so, next month is that 12-month expiry. Now, I think they're just going to reproduce it. They'll extend it and allow it to keep on going. But yeah, there's a trend. You would think. Here's an interesting stat, and it's been too long since I can't quote the numbers. I'm going to use numbers that I'm just making up, but the trend is true, I promise. Prior to the Great Depression, there was something in the order of like 20,000 banks in the US. 20,000 banks. After the Great Depression, I think that went down to like 5,000. Something. It was massive. Like 75% of banks got wiped out and accumulated by bigger banks. And then that trend has continued, and we're now down to like 2,000 banks, something like that. And which is ridiculous because the population during that time, since the Great Depression, done something in the order of like double, triple, quadruple, something like that. But with all this money printing, what happens is you get centralization of power. The people closest to that money get an unfair advantage, and they also become too big to fail. See, there used to not be too big to fail. Now there's too big to fail. And so the too big to fail gets bailed out. They just get, here, we'll help you. Go and accumulate all your competitors. And we come, more and more towards this less competitive world, and more towards central planning. So that's like kind of the big obvious downside of money printing that everyone kind of knows and talks about, that and inflation. And all of these kinds of things, you just have to understand that that's the trend. I would say it's planned. And the big boys, they want market calamity every now and again, every couple of decades, every something. Give us a market calamity. We get to knock out 20, 30% of our competitors. We get to buy them up, scoop them up for pennies on the dollar. And we have less competition for the next 10 years. And that process has been going out for 100 years. And it's going to continue. So you have to understand that the banking industry is in trouble. You got the commercial real estate industry, which we can talk about too. So the commercial real estate industry is in a very similar spot as the US federal government. Commercial real estate right now, typically when you buy your home, you're used to like a 30-year mortgage, right? And so you 30-year fixed. That's not the case in commercial. In the world of commercial, typically the loans you get are only 5 or 10 years, and then you have to reapply and get another loan. You have to pay the whole thing back and get another loan. You have to roll it over every 5 to 10 years in commercial real estate, right? Well, what happened is, starting back in 2008, when interest rates got brought to zero, everyone got on the same cycle. And everyone went out and refinanced, and everyone's on this cycle. And 5 years later, there was a little bit of an issue around 2018, 19. And then again, here we come up to 2023, 24, where all of this paper, it must get turned over, right? And so they're going to have to go and refinance. They had a mortgage on their commercial real estate for 1 or 2 or 3% or something like this. And now they're going to come and refinance it at 6%. And this is massively devaluing commercial real estate. So now the values, so now you got to refinance, but the value of the asset that you're using as collateral has gone down. And so there's these huge issues. Even if they could get the loan, they can't cash flow still because the interest rate is too high for them at the moment. And so you've got this massive problem going on in the real estate market that should kind of unwind here in the next year or two. That process is also happening with the federal government. The federal government has $33 trillion in debt at the moment. $9 trillion of it becomes mature this year. 2024, right? 9 trillion of the 33 trillion becomes mature. That has to be rolled over. So now, when the U.S. government, that debt they were probably paying about 0.25% on all of that debt, right? Well, now they're going to have to come and refinance. They have to pay 5% on the ship. They want another short term, or they can do 4% if they get like a 10-year treasury, something like that. And so the US federal debt, the amount of money that they have to spend on paying the interest at the end of this year is going to be a very different number than what it is this year. And you already alluded to the fact that it's in the trillions now, how much they're paying in interest per year. And that's going to go up significantly as a result of this $9 trillion being refinanced with much higher interest rates. So all of these things, there's just bubbles absolutely everywhere you look. And you know that bubbles find pins. You know there's going to be a problem. We should expect some kind of a hit. But we know the Bitcoin Bungee philosophy is that everything gets hit and Bitcoin responds first and very well, because the immediate reaction to that hit is money printing.
I want to take a moment to recognize one of our sponsors, Penumbra Solutions. Live settlements investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. If you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing live settlement investments, Penumbra Solutions, at cashflowninja.com/live settlements. That's cashflowninja.com/live settlements. The password to access that webinar is Penumbra, all lowercase. Another thing to bring in on the rollover of debt, right? If everything just stayed the same, meaning the underlying asset, the collateral, and you rolled it over, that was already going to be a problem. But now you have that rollover at a higher interest rate, plus the underlying asset, the collateral for that loan, is nowhere near what it was when they initially got the lending or the loans established. If you look at commercial real estate, in 2020, all of a sudden, governments shut down their countries, shut down their economies, shut down their markets, and all of a sudden, office buildings are empty. And all these buildings are empty, and people are not coming back because they've got different habits and behaviors now established. So you got all of that. And in the meantime, when all that shock happened, all the shopping went online. So even if you have retail tenants, their supply chains have been disrupted. Their cost of doing business has gone up. They're barely hanging on. And then you got to compete with Amazon, which is basically, funded by the U.S. government indirectly with all of their contracts, right? There's cloud contracts. So you got to compete with Amazon. That puts you out of business. So all of that then affects the value of the assets already in commercial real estate. And I mean, this you just have to drive around in the United States to see that. All of the empty spaces, empty office buildings, empty retail, kind of like strip malls and stuff. So besides the fact that you got the rollover, the assets are no, and to your point with the U.S. government too. Look at the actual real economy, not the fake numbers that they're putting out. The actual economy is under severe pressure and not doing well by any decent metric that we used to look at. Now it's completely different. I feel like they're just making up stuff. But the real economy that is the collateral for the debt of the U.S. government too. I mean, that doesn't exist anymore. So this is going to be very interesting to see this play out, to your point.
Yeah. And I think the big thing that I think people need to have as a takeaway here is that they have to understand that if they continue doing what the governments want you to do and what you're taught to do and what's within the bounds and what the financial planner tells you is allowed to tell you, you are a lamb being led to slaughter. And that's the biggest thing. You have to figure that out up front. And once you get that, it's like, oh, okay. Like, and you know, even if you've watched movies like The Big Short or another one about that kind of period, it was about when the banks and the Goldman Sachs, when they get in trouble, you're a retail customer, you're there to buy their shit. It's like, oh, I bought something. It failed. Get on the phones, sell to all of our retail customers so that they take the losses, not us. So you are their escape hatch. And that's obviously not the way you want to be. That is why Michael Saylor gave a brilliant talk at I think it's called the Atlas Society, which is like for Atlas is in Atlas Shrugged, from why is her name?
Ayn Rand.
Anne Frank in my head.
Yeah.
Thank you. I had Anne Frank in my head and I could not get Ayn Rand out of my mouth. Thank you. And so anyway, at this talk, the point was he spoke about Bitcoin is like a union. When you choose to go and put your wealth in Bitcoin, you're saying, I want to join with my brothers and be part of a union which is prepared to save ourselves and not be the people who are led to slaughter so that Goldman Sachs can be saved, right? And it's like joining a union to say, no, just normal mums and dads, people saving for a future. I'm going to go and live in this financial world, the future, so that I can, I've got this world and I can protect myself. And it was a really, really cool and powerful speech. I highly recommend everybody watch that. And that's how very much I view Bitcoin. It is a union of people who want to escape certain financial misery. And that's what you really need to understand. With 100% certainty, if you stay in the system and you go through all those traditional mechanisms, you are, the lamb being led to slaughter. That's just how it is. Once you realize that, you now have, an openness in your mind where you can go and look at new things. And what a good chunk of people realize is once they research Bitcoin, it's like, Bitcoin is that thing that does all the things and protects me, ticks all the boxes.
Yeah, you've got a sorting coming up, right? It's almost this Hunger Games society that you're going to start to see because the middle's just going to get completely eaten. That's what inflation's designed to do, by the way. If you read any economics, any Austrian economics, and even if you read the words and the writings of communists and the Communist Manifesto and Karl Marx and all those guys and Lenin, some of his speeches, this is literally what inflation was supposed to do, right? And it's going to get very, very, the velocity is going to increase and that'll hollow out the middle. And you're going to have these two kind of like levels of society where you're either going to end up in the capital using the Hunger Games analogy, or you're going to be stuck in the district somewhere, right? So you need to be proactive and take steps and get the right tools in place, which Bitcoin could be a very powerful tool and a hedge against a lot of this turbulence and, of course, this inflation that you're talking about.
Absolutely. And I think it really clicks for people when they just change one word. Inflation, which is the word comes from inflating the money supply, right? Increasing the quantity of money out there. We feel it in rising prices for everything, but that's what inflation is. If you change the word inflation to legalized counterfeiting, then all of a sudden it makes sense. Some people think that counterfeiting is illegal because, well, it's not fair because they got something for nothing. And that's not true. Counterfeiting is a theft. If we're in a village, there's just you and me in a village, and we both got $100, and I'm allowed to print $1 million. Clearly, your $100 isn't worth anything because I can outbid you on everything. So the value of your $100 just went away. Your savings was just stolen. You've still got the $100 in your hand, but the purchasing power of your $100 just evaporated. It was stolen by me with the printing press, right? And so when you understand that counterfeiting is theft, and you understand that inflation is just legalized counterfeiting, just joining those dots in your head, now all of a sudden you're like, oh, this is why there's a law in the books. We have to pay our taxes in US dollars because they want us to use dollars because they get to steal from us again through the mechanism of inflation. And with the printing press, they can take everything off of everyone in a day. Now, if you have the golden goose, right, you obviously don't do that because you get to use it once and then they lynch you and you're done. So what you do is you convince people that for a good, healthy economy, we're targeting 2% inflation. Because then this goose will lay the golden eggs forever because people will just allow you to confiscate 2% of their wealth every single year and you get away with it forever. Once people understand that, it's like, okay, I have to get out of this system. Saving in dollars is silly. I need to save in something else. And then you just look at the facts. Go back 10 years. And if a person's on a relatively low income was managing to put away $200, $300, $400 a month trying to save for a deposit on a house, they're still saving. They may have got to the point where they've got $20,000, $30,000 in the bank, which maybe was a deposit for a house 10 years ago, which was their target. But now the house went up so much because of so much inflation, their $30,000 wasn't enough to be the deposit for the house. Right? So if you were saving for a house in dollars 10 years ago, you still haven't bought the house. All right? If you were saving for a deposit in Bitcoin back then, right? It's putting away $200 a week in Bitcoin. Well, now you could buy the house absolutely outright, no mortgage whatsoever. You could just buy it in cash. So once you join all those dots and make Bitcoin your savings vehicle, now all of a sudden you're going to be very, very wealthy in 5-10 years time.
Awesome. Max, where can folks follow you, stay informed of all of the many projects that you're involved with, and stay up to date of some of your updates? I know you've got a fantastic YouTube channel too. If you don't mind sharing that.
Yeah. So if you could go to my YouTube channel, it's Success Council. My name is Max Wright. You Google either one of those two things, you're going to find my channel. And then we can probably put a link in the description if you want. Every now and again, I do I just love teaching. I'm a teacher, right? So every now and again, I'll just do a video, I'll do a webinar, and I'll jump up on a whiteboard with a pen. I'll just map out everything, how the next few years are going to come. I've got some of those coming up. So we'll put a link in the description if you like, and people can go there.
Sounds good. Yeah, we'll put that at cashflowninja.com/Max. That's cashflowninja.com/Max for your webinar. There's usually, our audience have really benefited from that. I've gotten such good feedback from the previous one that you shared and did with us. So I would highly recommend it. And people in our community and in our audience, they found it extremely valuable the last time. So cashflowninja.com/Max. Max, thank you so much for coming on the show. And again, sharing your insights and as always, providing so much value for all of our listeners and viewers.
Awesome. Thanks for having me.
And thank you to all of my listeners and my viewers for spending your most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. And if you want to stay up to date with everything that's going on at Cashflow Ninja and access all of our free podcasts, our books, our reports, and courses, you can subscribe to our newsletter at cashflowninja.com/subscribe. That's cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.